So therefore, let's take a look at the market structure and let's see where the price is currently. S&P 500 futures, our guiding light. I expect pullback at any moment because my spectacular third bullish wave formation at the danger zone levels. When price reaches danger zone levels, as prudent and conservative traders, we stay out of the market until we will get a powerful pullback. Acquiring trend position anywhere at these levels is not a conservative trading. It's pretty aggressive trading because at any moment we expecting a pullback. As you're witnessing time and time again, the importance of danger zone and the importance of staying out when price reaches these levels. So more than likely we'll get pullbacks sometimes around 1696 to 1697 area, but because it is such unpredictable structure, I know better, and I'm patiently monitoring the formations and staying out. Oil, Tutti Frutti oil, as expected overnight, markets found the end of the minor trend. This level is incredibly critical as this is where price decides, do I want to become major trend or do I want to remain minor? This is actually the most critical level in the market structure, which is drastically different than where S&P 500 future is, as S&P 500 already at the danger zone and oil is not. As we discussed in Alpha Wave Traders Club, I expect oil to blast through this level to 104.98, 105, and more than anything 104. Would love to see oil tomorrow at 104 during the news release. So there we go, this is the levels. So therefore I'm monitoring for the powerful pullback on oil. So far it's very weak. If you trade Alpha Wave Traded method, you already had long opportunity that set up 20 minutes prior to the market open. But at this point I'm monitoring the formation very carefully to see if it's meaningful or if it's only a bullish pullback. Speaking of the devil, why don't we monitor oil very carefully, because on other time frames I'm already seeing long to the upside. There we go. Let's see what oil will do. Entry 105.76, 105.76, 105.77 area. Very critical what oil will do at 105.84. And once again, reminder, what are you witnessing already on ES? ES is already taking a pause as expected. Okie dokie, showtime on oil. Adjusting my stop on oil to 105.71. Adjusting my stop on oil to 105.73. Reminding you the importance of knowing where the end of the minor trend is, where to monitor for trend reversal. Very critical level in the market structure you don't want to enter into. There we go. We are start getting the pause on the structure on oil. Trail outside of break even, 105.77. Is everybody clear how critical these levels are? It doesn't matter what you trade. If it's oil schmoil, if it's S&P 500, or if it's Apple. Here's my Tutti Frutti short on Apple. That's also reaching third target. The short on Apple we took in Alpha Wave Traders Club from 500 area. Know where danger zone levels are. Know where decision point one is. This is the end of the minor trend. This is where short trend had found support. This is my guiding light. And this is my trade, reminding you incredibly clearly how critical and essential knowledge of pure price action and Fibonacci levels are. This is what identifies the most critical levels in the market structure. So if you're trading long-term oil, this was your first target to the downside. Formula remains the same. It doesn't matter what I trade. And I'm expecting a pullback, correct? And that's exactly what we're monitoring on S&P 500 futures currently. That's why I'm not entering. Formula is identical if it's oil 8 or if it's S&P 500 1-hour chart. And what are you witnessing? Very, very clearly how essential knowledge of danger zone levels is. Where to expect the pullback from, where to expect your trade exhaustion level. And that's exactly what I'm monitoring very, very patiently on ES, because just like oil, 8 range, S&P 1 hour at these levels. So therefore, patience is essential. This is major trend exhaustion level, and pay attention to what ES had done when it reached decision point 1. Exactly resistance levels that the ES had struggled to break through overnight for 5 hours, and here we go. We start getting a bit of a selling pressure on the ES. That's what I'm monitoring for very, very carefully. So you see very, very clearly how critical the end of the minor trend was on S&P 500, how critical danger zone level is, oil 8 range. That's what I'm waiting for and monitoring very, very carefully on ES. And reminding you, if you know where decision point 1 is, you are monitoring 4 long entries. Adjusting my trail closer, 105.78. Based on the trade structure, it is clearly your second target. Everything I do for demonstration purposes only. Each and every person has their personal circumstances, personal account size, personal lot size. So you have to understand how essential proper money management that applies to your personal circumstance is. So if you're trading single or double lot size, it's essential to respect the first target. If you're trading multiple lot sizes, it's essential to scale out, and reminder not to exercise greed. Respect the targets. As a day trader, it's very, very critical. So once again, everything I do, I demonstrate only on range charts in our day trading room. But as I'm witnessing time and time again, as it's music to my ears, seeing that our students trading long-term forex, stocks, options, which attracting more and more of my attention. Just received another email from Jim G. Unbelievable what he's accomplishing in forex long-term. So there we go. This pullback is completely expected, but as I spelled out, more than likely it will be pretty weak, because eventually I expect oil to collapse to 105 and all the way to 104. So once again, pay attention to the placement of my stop. Very, very critical. Trailing 105.83. So how predictable? Does it make sense why I named this level danger zone level? And that's exactly where our cutie fruity apple short is currently. Very, very close. Finding a pullback, I expect a very powerful bullish day on Apple. Ta-da! Do you see how close my trail is? Because I completely expected this. If this level is broken, oil will continue collapsing all the way down. That's precisely why this level is called danger zone. And that's why precisely I exercise patience and discipline and not touching S&P 500 future in the middle of wave 3. It's only prudent and conservative to know the danger of acquiring trend position at these levels. Because when the sellers will show up, they will do two things, either bearish correction or bearish reversal. Exact same thing You just witnessed on oil 8 range. I'm out, reminding you, if you know where danger zones and decision points are, you know where to take profits off the table, and you can trade anything.